to bring in our panel now, discuss the economic side of this. Adam Johnson, founder and author of Bullseye Brief. Paul Dietrich, Fairfax Global CEO, Chief Investment Officer there. And Art Hogan, B. Riley FBR Chief Market Strategist. Art, let me start with you here. This is obviously very complicated. The defense contractors are hired today, in part to a major merger between Harris Corp and L3. But also, I think maybe the notion that whatever happens here, those contracts will not be canceled.
Right, and I think, we look at this on multiple levels, Charles, and I think that, the question is not just what are we selling into Saudi Arabia in terms of aerospace and defense equipment, but, just how important Saudi Arabia is to the global supply and demand channel that is all things energy, right? So this is the first time in a good long time, and Adam can talk about this better than I can, that the cartel that is OPEC has actually stuck to quotas. And, if not for that, we'd have a very volatile energy market right now. So I think it's important on multiple levels in terms of the interconnectivity of Saudi Arabia and the United States, as long as we can find that there is no there there. If there's something larger where we have to take the next steps, obviously that's what we're going to do. But we can't underplay the amount of economic ties that we have with Saudi Arabia right now and how important that is in the global market.
Yeah, Adam, I mean that the economics of it obviously are important. The strategic location and the idea that we need someone to push back against Iran, particularly to get Saudi Arabia on the same page as Israel in a lot of ways. It's such a delicate dance right now.
The single most important thing that happened today, Charles, was the phone call between the president and the king. The fact that they're speaking at that level gives me tremendous confidence that they will figure out, they'll get to the bottom of this, and they're not going to let it get in the way of an incredibly important relationship, not just between the two countries, but as you point out, and certainly Art, that this is really a lever that gives us a foothold and an opportunity to affect change in the entire region.
Paul, last year, Saudi Arabia only was able to attract $1.7 billion in foreign investment. It was the worst year for them in 14 years. They are grappling. A lot of major investment CEOs this week and on Friday over the weekend saying, hey, we're not going to attend this significant conference there, investor conference, because, listen, I think they just make the assumption that maybe the stories are correct and they want to save face. But we do know Saudi Arabia, having also delayed this massive IPO, they're in an interesting economic quagmire themselves already.
Yeah, I think it's going to get worse before it gets better. The ruler, the young crown prince, who's known by MBS, he's had ambitious plans to diversify the Saudi economy away from oil. He wanted to make it a financial center and a tourist destination, much like Dubai is. And I think he can kiss that goodbye for the next 5 to 10 years. They're going to be somewhat of a pariah state. They have lots of money, but they need companies like U.S. banks and European banks to actually set up operations there, and I just don't see that happening. I think we're going to see an effort by Congress to pass a Magnitsky Act type of sanctions. I think President Trump will probably, in the end, if it passes, will probably veto it. But just the fact that all that will come up and this killing, it's going to soil the prestige of Saudi Arabia for a long time to come. We saw that after 9/11, where no one wanted to invest in Saudi Arabia after 9/11, and I think you're going to see this now on an ongoing basis, and this is going to hurt the Saudi economy.
What about the domino effect, Art? It's interesting because over the weekend, Saudi's stock market, which isn't in a lot of stocks, but it was down as much as 7%. Some anxiety that maybe that would spill over into our stock market. But more importantly, oil. Even over there, their media is saying, hey, if you guys push this too hard, crude could go to $400 a barrel. Well, it's barely moving today.
Yeah, and I think that's the important part, Charles. When you think about there's a lot of connections to be made, but the most important isn't how much they're spending in aerospace and defense funds. It's how important they are at the center of the global supply and demand chain for energy product, right? So not only have they been the string producer, not only have they been that part of the process that has kept the cartel in check, but on the flip side of that is without that, sort of in the center of the decisions that OPEC makes, who knows what OPEC decides to do? So I think you can make an argument that oil oil could go to 200, it could go back down to 25 bucks if Saudi Arabia steps away from the cartel and decides to take aggressive action. So I think they're important in that process. Keeping peace in that area is important. So we need to find a way to get to a ground where we can get to the bottom of what's happened here, and to Adam's point, make sure people at the top level are talking about this to get to the bottom of it as quickly as possible.
Well, I mean, think about this, Charles. What we're talking about, right? I mean, it's one person, it's one crazy situation we can't quantify, and we're talking about a breakdown of relations between two incredibly important allies. It's like this loss of perspective. We're also hair trigger. We're also caught up with Twitter and saying the right party line in exactly the right moment and immediately responding on which stocks should go up and down. It's just, we need to step back and understand that these are complex times. There is accountability across the world, and we will sort this out. And the fact that oil actually is barely up, Charles, that's telling you that calmer heads are just stepping back and doing exactly that.
On that point, though, Paul, Wall Street executives themselves have knee-jerk reacted. The masses of the universe, right, the Steve Schwarzmans of the world, the Jamie Dimons of the world, pulling out of this investor conference. They've already, in my mind, have already come to their own conclusion. Now, I'm sure they'll do business. I'm sure they won't pull their assets out of there. And this is just perhaps a public relations face savings. But the idea that they moved so quickly did add something to all of this, didn't it?
There's no question about it. And these executives are really, they're in a difficult position. Schwarzman, for example, I think he's got a $40 billion fund that he's jointly managing with the Saudis. The Uber executive pulled out, and Saudis own a lot of Uber stock. And so they're trying to balance the public relations disaster of being in business with someone who would kill a journalist and dismember them, and on the other hand, continuing to do business with one of the wealthiest sovereign wealth funds in the world.
Yeah.
I live down here in Washington, D.C., and, his initials, the Crown Prince's initials are MBS, and I was talking to some people here in Washington. The first time I heard people, calling him, names associated
taking the
with
initials and doing what you will with it, but certainly not attractive. Hey,
Yeah.
It's a complicated, ugly situation, and it's certainly another cloud that's hanging over the markets. Gentlemen, thank you very much. Adam, Paul, Art, we'll come back to you a little bit later. Meanwhile.
So Sears Roebuck, when I was growing up, was the big deal. And it's very sad what happened. Very, very sad. When you look at that whole filing that they did last night, to me is very sad. Somebody that is of my generation, Sears Roebuck was a big deal.
It is indeed the end of an era. Sears files for Chapter 11 bankruptcy protection today in a last-ditch effort to stay alive. Now, the iconic brand, which started back in the late 1880s selling watches, has faced staggering losses and massive debt. The news on the same day that we got mixed results on retail and food sales last month. Now, the headline read of 0.1% was certainly less than expected, but internet was huge, and some lagging sectors made impressive rebounds. I want to bring back Adam Johnson, Paul Dietrich, Art Hogan with us. Adam, let me start with you. There's a part of this report, they call it the control group,
yes,
that was so strong they said it was going to be a stronger positive for the GDP number. So
and it was
a mixed report.
Oh, no, it's a great report, Charles. Fine. If you look at the headline, what was it, down 0.1%, that's not what you want to watch. This control group you're talking about basically excludes building products, it excludes gasoline, and then certain types of food. In other words, it resembles what GDP I'm so excited I can't talk about it. It resembles what GDP looks like. And the fact that that is up 0.5% is huge for us, Charles. I remember back in January talking about GDP going to a 4 handle, and we're now going to be in our third quarter, or I should say second quarter, of GDP being above 4%. I think we're going to get a lot more out of it. It's a great story, Charles.
And let me ask you, Art, it is the end of an era, but it's an end that's been coming for a very long time with respect to Sears. And there's some cautionary tales there, I would suspect, for any retailer out there. And it's not just about Amazon, is it?
No, it really isn't. And I think that if there's a cautionary tale for anybody that's in a leadership position that doesn't listen to the winds of change. So think about Eastman Kodak and Polaroid, something like a BlackBerry or a Palm. You think about companies that don't don't pivot at the time that things are changing. So for Sears, it was really companies like Walmart that came in and started deteriorating their business, and they needed to adjust to that, either get their box size a little bit bigger, be in smarter locations. It wasn't until years later that it was Amazon that obviously ultimately hurt everybody in retail, and Sears obviously at that point in time was too far gone to have an online strategy. But it's I think the overarching message is, yeah, it's great to be in first place, and Sears was the #1 retailer in the world, but you also have to adjust to change. When change comes, you have to adjust your business plan to adapt to how things are changing and how consumer demand is changing. Sears just didn't do that. Kind of sad to watch. I think it's probably where I bought my first suit 100 years ago, and
you still have it.
Unfortunately, won't be able to bring it back now.
Maybe
Right, exactly.
today, Charles.
You wore it just for this show. Hey, Paul, the consumer, 2/3 of the economy. This is why this is a very important number. Of course, like all of them, they're sort of backward looking. But we've got some retailers on the screen now that are higher today. You can add Children's Place to that list, Dollar General to that list, Ulta Salons to that list. What do you make of the consumer? We need the consumer to remain confident and to go out there and to continue to spend. Do you think that's going to happen?
Yes. I mean, you have to take these monthly reports in some sort of broader context. I mean, overall, retail sales were up 4.7% year over year, which is great. And when you start seeing those digital shopping and mail order numbers as opposed to the bricks and mortar stores, those were doing great. The only reason restaurants and bars, which took a hit of a 2-year low, was largely because of the hurricane in the Carolinas and the miserable weather we've had for the last month on the East Coast. It's going to come back, but even restaurant and bars are up 7.1% year over year.
Sure.
This is very, very strong, and I think with wages going up, with everyone having a job, you're going to see the retail sales numbers continue to climb.
Let's talk real quick. There's a lot of talk, Adam, with Amazon.
Yes.
Should it be broken up, or will it inevitably one day be broken up? And, I think some political party will do that, or at least attempt to do that. But I also believe that at some point the markets themselves will do this, because we see what happened with Sears. We saw what happened with Woolworths. We have seen time after time after where these behemoths that looked like they could never be stopped ultimately were.
Well, actually, Charles, I hope the company does it. If there are really two businesses at Amazon. There's the Amazon we know, right, which is where you buy the stuff, and then there's Amazon Web Services, which is growing like 60%. And they provide back office not just for themselves, but for so many businesses around the world. I hope they do split those two. Typically, when you do a spin-off like that, you unlock tremendous value within the company. So to answer your question, yeah, I hope that does happen. And by the way, just to hammer this point home about retail sales, this is a great and unique American story. It's the 2 E's of earnings and employment. This economy is doing so much better than people realize, Charles.
All right, gentlemen.
I love it.
Thank you all very much. Art, Paul, and Adam, thank you. Hey, coming up.